What is happening in the world of tech and finance? Get ready for a rapid-fire rundown that's going to blow your mind. We're diving deep into the latest buzz, from soaring stocks to surprising earnings. Stick around, you won't want to miss this. Smash that like button and subscribe because we're kicking things off now. First up, let's talk about Adobe. Are they finally turning things around after a rocky year? We've got the inside scoop on Adobe's latest earnings report and what it means for their stock. Plus, we'll break down why their AI products are finally starting to deliver. Next, we're diving into the earnings season roundup. We'll cover how Oracle is absolutely crushing it with their cloud growth, while GameStop surprised everyone with their revenue surge. And what about Synopsys? We'll tell you if their cautious guidance is a red flag. Finally, the market is buzzing about RH, also known as Restoration Hardware. Are they hitting the mark or falling short? We've got all the details on their latest financial results and what it means for their future. Don't forget to hit that subscribe button and ring the bell so you never miss an update. Adobe's stock surge, a surprise comeback. Adobe's stock, ticker ADBE, is making some serious moves, and it's a bit of a shocker. After a period where their stock often dipped post-earnings, Adobe just reported strong quarterly results and gave an optimistic outlook that's got investors talking. Why the surprise? Well, historically, Adobe's stock has dropped the day after earnings reports about 75% of the time, making this positive momentum quite the turnaround. With ADBE currently trading around $360, the big question is whether this is the right time to invest. Despite being down about 20% this year, while the S&P 500 climbed 12% and facing slower than expected AI growth, Adobe's numbers are telling a compelling story. Their annual recurring revenue, ARR, from AI-influenced products has now surpassed $5 billion, a significant jump from $3.5 billion at the end of fiscal year 2024. While this might seem modest compared to AI giants like Google or OpenAI, the market seems to have already factored in this slower growth. From a valuation perspective, Adobe looks incredibly attractive. Trading at 18 times its trailing adjusted earnings, it's half of its 5-year average P/E ratio of 36. Our deep dive into Adobe's performance across growth, profitability, financial stability, and downturn resilience reveals a company with a robust operational and financial foundation. Despite being more expensive than the benchmark index on a price-to-sales basis, the current valuation makes ADBE stock a compelling buy for those with a 3-5-year investment horizon. The market reaction has been largely positive, with analysts noting the attractive valuation and strong underlying performance. While some investors might remain cautious about the AI growth pace, the overall sentiment points towards a solid investment opportunity. Don't go anywhere, because we're about to reveal how Oracle's cloud forecast is absolutely exploding. And stick around as we break down the latest earnings from GameStop, Synopsys, and RH. Adobe's Q3 triumph, AI fuels record revenue. Adobe Inc. just dropped its third quarter 2025 financial results, and it's a big win, fueled by their cutting-edge AI offerings. The design software giant reported a record $5.99 billion in revenue, an impressive 11% year-over-year increase that sailed past analyst expectations of $5.91 billion. On the earnings front, Adobe's adjusted earnings per share, EPS, landed at $5.31, comfortably beating Wall Street's forecast of $5.18. CEO Shantanu Narayan highlighted Adobe's leadership in AI creative applications, with AI-influenced ARR now exceeding $5 billion and their AI-first ARR already surpassing year-end targets. Buoyed by this strong performance and customer strategy, Adobe is raising its full-year FY25 revenue and EPS targets, projecting fourth-quarter revenue between $6.08 billion and $6.13 billion. Also topping analyst estimates. The market is clearly responding to Adobe's AI momentum and solid execution. This beat-and-raise scenario signals strong demand for their integrated creative and AI-powered solutions, positioning Adobe for continued growth. But the earnings season isn't over yet. We've got more winners and some cautionary tales coming your way. Get ready as we unpack the latest from Oracle, GameStop, and Synopsys. Earnings blitz, Oracle soars, GameStop surprises, Synopsys dips. It's been a whirlwind earnings season, and we've got the key takeaways. Oracle is making massive waves, with shares skyrocketing after unveiling an explosive cloud growth forecast. They now expect their cloud infrastructure revenue to hit a staggering $144 billion by fiscal 2030, a monumental leap from $10.3 billion in 2025, a projection not seen since the dot-com boom. Meanwhile, GameStop surprised the market, with shares climbing after reporting second quarter revenue that handily beat Wall Street estimates, rising nearly 22% year-on-year to $972.2 million amid their turnaround efforts. On the flip side, Synopsys shares took a hit. The electronic design automation firm posted a revenue and profit miss for their fiscal third quarter, and their cautious guidance has investors on edge, despite a 14% year-over-year revenue increase to $1.74 billion. Other notable reports include RH, formerly Restoration Hardware, whose revenue fell slightly short of expectations, and Kroger, which beat estimates and raised its annual sales forecast thanks to strong consumer demand. Empire Company also kicked off fiscal 2026 with record quarterly earnings per share. The market's reaction is a mixed bag. Oracle's bold forecast is driving massive gains, GameStop's revenue beat is a positive sign, while Synopsys' cautious outlook has tempered enthusiasm. But what about the companies that are making headlines for their stock movements, even amidst these earnings reports? We're diving into the biggest stock movers, including IonQ and Warner Bros. Discovery, right after this. Midday market movers, RH, Adobe, and more. Stocks are on the move today, and we're highlighting the biggest players making waves. RH, formerly Restoration Hardware, has seen its shares react to its second quarter financial results. While revenue saw an 8.4% year-over-year increase, reaching $899.15 million, it narrowly missed Wall Street expectations of $905 million, leading to a downward trend for its stock. We've also seen significant activity around Adobe, whose strong quarterly earnings and optimistic outlook are generating buzz. Despite a challenging year, Adobe's AI-driven offerings are boosting revenue and leading to positive investor sentiment. Other companies like IonQ and Warner Bros. Discovery are also capturing market attention with their latest stock performances. Investors and analysts are closely watching these movements, weighing earnings reports against broader market trends and company-specific news to gauge future performance. The market's reaction to RH's slight miss and Adobe's continued AI traction showcases the nuanced factors driving stock performance today. That's a wrap on our top stories for today. Make sure to subscribe and hit that notification bell so you don't miss our next deep dive. All right, let's do a lightning recap. Adobe's stock is showing surprising strength after a solid earnings beat driven by AI demand. Oracle is absolutely crushing it with a massive cloud growth forecast, while GameStop posted a revenue increase that beat expectations. And RH's latest earnings, while slightly missing targets, are still part of a dynamic market. Don't miss out on any of these crucial updates. Smash that like button, subscribe to Microsoft Sphere for all your tech and finance news, ring that notification bell, drop a comment with your thoughts, and follow us on all our socials. We'll see you in the next one.